You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 19th day of August, 2019. Hope you had a great weekend. Whoever you are, wherever you are, we're just glad you're right here, right now. Thanks for joining us. I don't have a chart up of the S&P 500 Emini Futures, but I can fix that with the click of a mouse. Those are last week's zones you're seeing, by the way. Partners and passport holders got the new zones this morning, 6:15 a.m. Eastern, as they have since December 14th of 2009. That's right, we're approaching a 10-year anniversary of the weekly trading zones. Now, if you can't see this chart I have up, just go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that's going to give you one-click access to the show each and every day. On the days you find yourself out of the office, away from the desktop, not to worry. Point any internet-connected browser to youtube.com/CFRN/live, There you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Now, if you are logging in via YouTube, this is important. We have a chat running on the site with the software we use that you can join the show with. But if you, again, are away from the office, away from the desktop, and you have to join via YouTube, even by phone, not to worry, use the Telegram discussion group to ask questions, okay? Don't want you to feel like you're shut out in the cold. Those who've logged in through the site, they have direct access to the chat box. If you're on YouTube, you don't, so use the Telegram discussion group channel. If you don't have that link, get a hold of Valerie, email her support@cfrn.net, or call her 949-42 Emini, 949-42 Emini. That's 949-423-6464. All right, let's take a quick look at the daily chart of the S&P 500 Emini Futures. And we'll get rid of that and that for now. Okay. So what's going on? We had a bearish cross August the 5th. Okay. Big leg to the downside. A retracement back up to the BBC, which is what we expect. Price always reverts to the mean, and in our case the mean is the BBC, and that simply stands for bull bear cross. As you can see from the chart I have up, when price is above this green line, we simply anticipate higher prices. When price is below, we simply anticipate lower prices. You'll notice over here when we had the bearish cross, we put in a leg, a retracement to the BBC, and then a continuation of the leg. What happened over here? Bearish cross, leg, retracement to the BBC, a continuation of the move. What's different about these two pictures? Okay, all right, this pullback held, as did this one, and we put in a lower low. We pulled back to the BBC and it didn't hold. Just remember, it always holds more often than it doesn't. Now, this leg did not put in a lower low, which means this pullback to the BBC might not hold. Okay, it's not as high a probability as if we had put in a lower low. Even when you do put in a lower low, this can still happen. Price will do one of two things right here at this juncture. It will manage to close above the BBC, then we'll be anticipating higher prices, or this resistance that we've been dealing with most of the session, which began last night, 6 p.m. Eastern. We ran up to it and we've just kind of been stuck there. Here, let me show you what I mean. Yeah. Now again, these are last week's zones. Partners and passport holders have the new zones. They got them this morning. Even those on a trial. By the way, we do have a Logic 247 trial going this week that includes access to the live training room. Now, there's only one trial every 6 months. If you've already taken the trial, your next step is to book a one-on-one mentoring session so that I can answer any questions you have, clear everything up, so that you can make an intelligent and well-informed decision whether or not what we do is right for you. If you've never taken the trial, go to eminitrainingschool.com/results. Let me show you what that looks like. eminitrainingschool.com/results. Okay. Countdown clock has done its job because the event started last night, 6 p.m. Eastern. Here are some charts from last week. There's an article about the good life. I really think you might want to read this, all right, when you have some time. Many of you have heard me talk about Ecuador for years. This will give you sort of an inside look, okay, what it takes to get there. And then right here, register here for the free trial. Your name, your email address, any message that you might want to send, any particular trading issues that you're having, something that you want some one-on-one attention with, just type it in, all right? Hit send. Go check your inbox, because we'll send you the link and the password. If you need to talk to a trader, click here to be connected to a trader. All right. And required reading, CFRN.net disclaimer, CFTC risk disclosures. Now we mean what we say. Required reading to participate in trial. All right. Okay. Got lots to cover today. Concierge Trade Alerts, Logic 247 alerts. Of course, we'll talk to John. First, I'm going to give you the numbers from around the world. Cash markets starting here in the U.S. Then we'll go to Michael and get a recap of everything that happened in the live trading room this morning. All right, starting in the U.S., the Dow currently up 258 points. That's 1%. That's a 1% gain right on the nose. NASDAQ up 117 points. That's a gain of 1.5%. S&P 500 up 35, gain of 1.25%. And the Russell 2000 up 18, again, a gain of 1.25%. Now, yes, the markets have started off with a bullish tone for the week. However, we only have one weekly trading zone above us on the S&P 500. That and a few other things led me to share last night in the discussion group that I believe by midweek, if not sooner, we're going to see lower prices, possibly significantly lower prices. Now, that's not a forecast, just sharing my thoughts with you. We're going to deal with each day, with each move, as it appears right before our eyes on the big screen. Okay? Now, this puts it a little bit in context with this last move that we had down on the S&P. Triggered once, twice, 3 times. The trigger was 2865, a 25-point target. Hit it once, hit it twice, hit it 3 times at $50 per point. That's $1,250 per contract traded from the entry, the trigger, to the published target. Okay, that's $1,250 per contract traded once, twice, 3 times. Now, if you're one of our traders, or just a trader who has earned the right to trade 10 contracts, this move right here is a $12,000 move. So is this one, and so is this one. Now, I can't stress enough the importance of not jumping in and trading 10 contracts just because you got the money, because you want to keep that money, right? You've kind of become attached to that money, right? My job is to help you hang on to it. So, if you become a partner or passport holder, if you embark on the 24/20 blueprint journey, your first goal will be to put together 10 consecutive days in a row in SEM where you reach your daily goal in 10 trades or less, just the way we teach. Once you accomplish that, you go live with 1 contract. We then want to see you increase your account balance by $2,000. Then you add your second contract. After that, you will add additional contracts based upon your success and the calendar. Okay? The 24/20 blueprint is designed to take a trader from 1 to 20 contracts over a period of 24 months. However, because life happens, especially over a span of 2 years, you probably won't get there in 24 months on the nose. You won't get there any sooner, I can assure you that, not if you follow the blueprint. Chances are, though, you or someone you know will get sick. You'll have to take a vacation. Like I said, life happens. So it will take as long as it takes. Each person is unique and different, but the blueprint lays it out for you, step by step by step. Okay? All right. Numbers from around the world. One more time. The Dow's up 260 points, Nasdaq's up 116, S&P 500's up 35, and the Russell 2000 is up 18. In the commodity basket, crude oil up 71 cents, trading 55.58 last. We have rolled to the November contract. Now that's a gain of a little over 1.25%. Gold, on the other hand, down $10.50, trading 15.1310 last. In the Asian markets at the close, the Nikkei posted a gain of 144 points. Shanghai posted a gain of 59, and the Hang Seng posted a gain of 557 points. That's a gain of over 2%. Same for the Shanghai. A 59-point gain on the Shanghai is a little over 2%. And in European markets at the close, FTSE was up 72, 1%. The DAX was up 152, 1.25%. And the CAC posted a gain of 70 points, again a little over 1.25%. That gives us a green day in Asia, a green day in the UK, and it's a big green Radio Monday here in the US of A. Let's go to Michael, get a recap of what happened in the live training room this morning. I'll be back. We'll go over all the alerts so far this week. Remember, we start 6 p.m. Eastern on Sunday night. It was quiet going early on, but as we approached that London Open, things began to pick up a little bit, and then we ran into some resistance, which we fully anticipated. I talked about it all evening in the discussion group channel. If you're on the trial, you have access to the alert channel, but you also have access to the alert trial discussion group. Very important that you log in there as well, participate in that discussion. It's the perfect place for you to ask any questions that you have and get an answer. Michael, take it away.
Okay, I got it. All right. Everybody should be looking at my monitor right now. Yes, you are. Excellent. All right. Excuse me. Good afternoon, everyone. Today is Monday, the 19th day of August, 2019. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage here at CFRN.net. And over here in the right-hand column, this is 5-day free trial. Apply.cfrn.net. When you click on that, you'll be brought to this page, which you could go to directly if you wanted to. It's eminitrainingschool.com. On this page, you'll have the option to watch some videos and interesting things. And all we ask for is your name, your email, and your phone number. And down here, you can tell us your biggest trading challenge so we can tailor the one-on-one training specifically for you. Hit the send button, and you'll be sent all that you need to get into the live training room. Okay? Okay. My recap. We had our first blue day since October 19th of 2018. Blue day means we got the goal for the day, but then we kept trading and we gave it all back. So we only had 7 trades today. 1, 2, 3. 3 of them were break even. 2 of them were +5, and 2 of them were -8. Okay, so we ended up with -11 on crude, +5 on gold. Put us at -60 on the morning session, Today it took 38 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 per contract. And we took a total of 7 trading opportunities this morning. So on the month now, we're at $4,266. That's over 13 days, averaging $328 per day. Okay, on the year, we're at $21,817. That's over 147 days, averaging $148 per day. Okay, now if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now let's take a look at what we did or didn't do. The markets, we had no news events today. So we were happy to get the goal early on. Sad to give it back, but you know, that's the truth about trading. You don't win them all. All right. And so right in here, we started out on gold. We started out with a break even here and then a +5. And then we didn't have any other trade setups until way over here. We ended up with a break even on that one, and we missed this one. Okay, since then, let's see, during the break, we broke dynamic resistance right here. It pulled back down, hit the BBC. The cycle was blue and above the green line, so there was a long opportunity right there. Yeah, there was a follow-up with a short opportunity, I think. Hang on, let me draw a trend line. That's close. No, I guess that wasn't. And that was it. That was it on the gold today. Okay. On the euro. Let's go through the euro. We had nothing. Absolutely nothing. All day. There was nothing that we can do on the euro. There's just no trend here. Step 1 is make sure you have a trend. And the day started right here. Well, right here. And ended right there. And we just don't have any trend in there. Okay. And on the crude, let's see. Crude, which is my favorite market, is what we got the goal for the day on. Right here is when we got the goal for the day. But we started out with a break even here. We picked up 5 ticks there to give us the goal for the day. Then we stopped out pretty much to the tick here. And then it went up and did what it should have done. And we stopped out again pretty much to the tick here. And then it went up and did what it should have done. And then it was just sideways the rest of the session. Okay. It's gone down into this weekly trading zone that it's been dealing with all morning. See that? How many times it hit that zone this morning? If we back it out a little bit, you can see it a little better. See, it came down, hit it right here, went through it, went back into it, in and out of 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 it. And it's doing it again right now. On the ES, we didn't do anything today on the ES either. Let's see. We'll go back here and see if we missed anything here. Now, I was waiting for a strong trend. We just never got a strong trend. Nope. I suppose you could argue that there was a long trade right here off the BBC. And that would have eventually gotten you something. But it probably would have ended up break even right over here. Just looking for trades. And I'm just not seeing them. So it was just that kind of day today. You know, I was glad that we got the goal early on. And I wish I could have put my mouse away. But I can't do that. You know, it's a 2-hour training session every single morning, and I am there for the full 2 hours. All right, so we'll go back here to the spreadsheet. If you're going to read it, you're going to read all the CFTC risk disclosures down at the bottom. Again, we had a blue day, which means we did get the goal for the day, but we ended up giving it back. Okay, and ending negative on the morning session. Today we're a -11 on crude, +5 on gold. put us at minus 60 on the morning session. Today it took 38 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 7 trade opportunities this morning. So on the month now, we're at $4,266. That's over 13 days, averaging $328 per day. And on the year, we're at $21,817. That's over 147 days, averaging $148 per day. Okay. And over here is a little thing about the colors. Blue is we got $100 per contract, but I gave it all back during live trading. And that's we gave it all back. Just say that. Okay. Next, if you have not taken a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, eminitrainingschool.com, where all we ask for, if you click on this, all we ask for is your name, your email, your phone number. Fill in this box right here. You can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Okay? Hit the send button, and once you hit that send button, you'll be sent a confirmation link. You must, actually, I don't know if you sent a confirmation link anymore, but but you'll be sent all the information you need to take the free trial. Okay? Okay, we do still send that? Okay, good. Then you'll be sent a confirmation link, and you must click on the confirmation link. Okay, once you click the confirmation link, then we know you took the free trial, and that's all you need to do. Okay. Well, then you need to, download DT Pro, and we recommend anybody who's taken the free trial, download the software. Download the charting package for DT Pro. It's free, and then you can go into the indicator store and download our indicator set, and that's also free for the free trial. Okay, so you'll be able to keep up with me and follow along. And when I see that you've downloaded it, I usually would just send you my workspace, so you don't have to go through all the trouble of figuring out which indicators you have to apply and how to turn things on and turn things off and all that business. Okay, once I see that you've taken the free trial, you've downloaded DT Pro, you've gone as far as to download DT Pro, then the rest of it is not that difficult. Okay. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, and Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready to take it back.
I'm ready.
Okay.
And there we go. All righty. Recap of the recap.
Today, it took 38 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 per contract.
That's a good bingo.
It is. And if I could have, I would have put the mouse away, but I can't. And so, sadly, it was a blue day because I gave it all back. I stopped out twice in Crude, pretty much to the tick, and then it went and did what it should have done.
Now, what Michael just said is what we teach. Once you reach your goal for the day, put the mouse away. Go live life. Come back the next day, rinse and repeat, as they say. Because we are committed to trading for 2 hours for the purposes of training in the live training room. That's what we do. And you just saw that's what can happen, right? Now, if you had more time, no problem. You just keep trading, and then you find it back. So if you don't think that you can run into issues by trying to trade bell to bell, you will. The stories usually don't have a happy ending. I know a lot of traders. I only know 2 that actually trade bell to bell. At least so they say. One I believe, the other not so much. So maybe really it's just one. If you spend the week with us, if you spend time in the trial, both the Logic 247 side and the live training room side, and those two dovetail together beautifully, you'll sort of get the feeling, you'll get the hang of it, you'll get the spirit of who we are, what we do, how we do it, and what you can learn here. Now I'm going to go over the Concierge Trade Alerts from last night, which were provided to you in the discussion group channel. After that, I'll go over the Logic 247 alerts. If you have any questions about anything that I show you on the chart or anything that I say, please type your question into the chat box, okay? We're happy to answer the question, but I can't answer the question that you don't ask. So if you see something that just doesn't make sense, stop me. I'm happy to explain it, okay? Okay. All right. If you want to grab a screenshot of last night's Concierge Trade Alerts, I'm going to drag it up. And there you go. Okay. Now, why two different kinds of alerts? Great question. The Concierge Trade Alerts, that is a static report issued every evening shortly after the Globex open, sometime between 6 p.m. and 9 p.m. Eastern. The numbers are good for the entire session. The Concierge Trade Alerts are based on previous price behavior. The Logic 247 alerts, those are issued dynamically around the clock as opportunity develops in the markets. They are based on current price behavior. So one is based on previous price behavior, one on current price behavior. When those two come together, and we had an example of that last night, so I'll show you. When those two come together, it bears more than a second look. It bears a very close look because it represents a very high probability opportunity. The weekly trading zone, the way it fits into the picture on something like that, is it becomes a trade to target. And when the markets are moving up as they were last night and this morning, we expect that weekly trading zone, when we get there, to act as good resistance. So I'll show you an example of that. One last thing, the indicators. They should support the move. And they did, as they do, and I'll show you that as well. Okay? All right, you've had a chance to grab a screenshot. So let's get cranking. All right, the Globex open last night was right there. That big green candle. 6 p.m. Eastern. Concierge Trade Alert said to consider being long at or above 29.14. Now, keep in mind, these are last week's weekly trading zones, okay? However, they have what we call carryover power. In other words, if it was good at the close on Friday, it's good at the open Sunday night on Globex. And you'll see that they carry over into Monday, Tuesday, Wednesday, and then slowly those new zones start to take hold. I don't break out the weekly zones to the whole community at large, typically until Thursday. Over the course of the week, I probably leak some of them out, but that's okay. But on Thursday, I give them to everybody, and I encourage you to jot them down because they'll help you out the rest of Thursday and Friday, Sunday night, Monday, as we move into the new week, okay? And you can get a little experience of using the zones without even being a partner or a passport holder, okay? It'll help you see just how beneficial they can be. So, consider being long, 29.14. We trigger, we run up to last week's zone at 29.19/20. We expect that to be good resistance until it isn't. And what happened? It was good resistance. We put in a swing high at 29.21. So that was a 7-point move at $50 per point. That's $350 per contract traded. For the 10 contract traders, $3,500. But getting out at a swing high or swing low can be difficult since we don't know it is such a thing until after the fact. Now, important prices, important areas are almost always tested. You're going to hear me say that a lot this week because it's so very important. If you can grab a hold of that, and if you take nothing else away from your week on trial with us, I promise you it will benefit you in the days, weeks, months, years to come. Okay? So, price gets back below the trigger. So we have one trigger here. We run it up into what we expect to be good resistance, right? 7-point move. Price comes back, gets back below the trigger, and we trigger a second time. Okay. We go up to the zone, which we again expect to be good resistance until it isn't. This is an example of it no longer being good resistance. We've closed above it. Now we expect it to be good support. And so what does price do? It pulls right back into the zone, confirms that it is good support, gives us a leg and a retracement, back to that good support, another leg. Now, here the swing low was 29.1550. So we were 6 ticks away from triggering a third time. Now, that's not unusual. I mean, this was back on Friday, or was it Thursday? 1, 2, 3 triggers. 1, 2, and we just barely missed that third trigger. Now, on the second trigger, which typically represents lower risk, higher profit potential, we traded all the way up to 28.5. That's where the market went, 29.2850. So that would be 14 S&P points, 14.5. Alexa, 14 times 50.
14 times 50 is 700.
Okay. So from here to the swing high, $700 per contract traded. $7,000 for the 10 contract trader. Okay, but again, getting out of the swing high, swing low, don't try to build a career on that. I mean, you will accomplish it every now and then, you know, just by luck, but it's not any kind of a trading strategy to aspire to. I have people tell me from time to time when we first get together, maybe we have our first mentoring session, tell me about yourself, tell me about your strategies. They go, oh, well, I just like to, you know, buy the low and sell the high. I go, well, how do you do that? Well, I'm still working on it. Okay, yeah, because it's hard, right? So rather than do something that we know is hard, why not do something that is simple, right? Nothing about trading is easy. There's no easy button. But there is a simple button, okay? We control the rights to the simple button. No, I'm just kidding. What we do is simple by design. If we glance back over here, there's another S&P trade that went triggered on August 15th, 9 p.m. Eastern, considered being long 28.62. That ran up 6 points, back below the trigger, 7 points. Yeah, first it was 6, then it was 7, then it was 16, and this last one, just like up here where we barely missed retriggering, here. We missed it by 2 ticks. 2 ticks would have given us another trigger, and that ran up to the zone where we expect it to be good resistance until it isn't, and that's a 22-point move. That's $1,000 per contract traded. Yep. And if you're the 10 contract trader, you can do your own math, I guess. Okay. This is the opportunity in the S&P, which came from the Concierge Trade Alert. Now, just to help you see what I want you to see, I'm going to jump over to the logic alert that coincides with this move. Okay? And that was, stand by. $29.11 to $29.13. Trail if possible. Thumbs up means the alert found its price target. Okay. All right. So we have at $29.11, which is right here. Okay. Consider being long. $29.11. So what we have is we have current price behavior telling us it's a good idea to consider being long at $29.11. We have previous price behavior telling us it's a good idea to be long at $29.14. Overhead, we have a weekly trading zone at $29.19/20. So what that's giving us is a trade to target. Okay, and look what happened. Up through 11, right up through 14, right up to that zone where it does in fact become good resistance, back below the trigger. We don't come all the way back to the $29.11, but we did dip back below the $29.14, which set the stage for either a 5-point move back up to the zone or this swing high, which turned out to be a 14-point move. So when I talk about the alerts, the indicators, and the zones all coming together, dovetailing to present you with an extremely high probability opportunity in the market. There's one more piece of the pie, one more piece of the puzzle. And these are the indicators that Michael was just encouraging you while you're on the trial. You get to use the indicators for free for an entire week. Okay? I dare say the trial will not be as meaningful for you if you don't actually put the indicators to work. Okay? All right. Whenever price is above the BBC, we anticipate higher prices. When price is below, we anticipate lower prices. Now that's pretty simple, right? Remember, it's simple by design. We could have gone through all kinds of complicated mathematical equations. You know, we could have borrowed stuff from all kinds of, we could have used indicators and oscillators and advanced decline lines and tricks and trends, and we could have used just a ton of stuff. We could have cluttered up our screen real good, like our screens used to be, to tell us the same thing: anticipate higher prices. That's all any of those things could do. But see, when you load up too many things, you got too many fingers pointing on a chart, it leads to analysis paralysis, because at any given time, about half of them are going to tell you to go long, half of them are going to tell you to do nothing. The other half tell you to go short. That's 3 halves. All right? Confusion. You don't want to be confused. You want everything to be crystal clear. So when you know that you're above the BBC, okay, you anticipate higher prices. So when you trigger at 29.11, you have confidence. And as you approach 29.14, you have confidence. And so from 11 to 19, that's an 8-point move. From the initial entry, then the secondary entry, which kind of says at this point, you're on the right track, stay with it, up we go. Now we have what's called an exit signal. Okay. This little red candle right here serves as an exit signal. It's not a good example on this particular move. What you need is an extended move to utilize the exit signal. So I'm going to show you that as soon as we come across one today here on the charts. So we had a leg and a retracement, a leg and a retracement. Price always reverts to the mean. And with us, the mean is the BBC. You'll notice down here we got the bullish cross. Blue line crosses above the green line. BBC, that's all it means, bull bear cross. Above we're bullish, below we're bearish for whatever time frame we're observing, whether it's a range chart, 30-minute chart, daily chart. So we have a leg. You see how price retraced right to the BBC, gave us this next incredible leg, pulled back to the BBC, gave us another beautiful leg, pulled back to the BBC, gave us another beautiful leg, and then it just kind of melted up, and we didn't get another pull back to the BBC until right here. It held. Remember, it holds more often than it doesn't. It held, it held, it held, it held. Now where are we going? Well, we got a swing high at 29.28.5. We have a double top. Actually, these are 30-minute candles. We got a swing high, 28.5, swing high, 28.5. So this candle right here, now its job will be to get above 28.5, which will give us a new swing high on the session. The session high, all right? Then what do we expect? Well, one of two things is going to happen. Price is either going to continue right up to this zone from last week, which we expect to be good resistance, until it isn't. Just as with every step all the way up, when price approaches from below good resistance, and when price pulls back from above, good support. Okay? You see it here being good support, and here good support, and here good support. So if we get above, now we've got 10 minutes left in the life of this 30-minute candle. If it closes above these two, the market is telling us that it's trying to get to that zone overhead. Now, this is worth taking a note. Price is always trying to get to a weekly trading zone. If the markets are open, price is trying to get to a weekly zone, either the zone overhead or the zone below. If price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. Okay? Zone to zone to zone, working on the zone. Now, I said two things could happen here. We could just break and run up to 37/38 if we can close above these two previous swing highs. If the market runs into resistance here, okay, you see how when it got to that price, 28.5, what did it do? Pull back to the BBC. Okay, price always reverts to the mean. It runs up, tags 28.5 again, pulls back, but the market is so buoyant right now, it wasn't able to pull all the way back to the BBC. But what I'm saying is if price does get stopped in this area, or any area between here and here, on that retracement, we would look for a pullback to the BBC, just like this. It holds more often than it doesn't, so that's what we anticipate happening. If it doesn't hold, we know how to handle that. But until that happens, we won't worry about it. The high probability move right now is for price to move from where we are. We got to clear this area. So we'll call it 29.30, okay? From 29.30 to 29.37, that's the high probability move. 29.30 29.30 to 29.35. All right, there's a radio freebie. Now, why 35? Why not 37? Certainly, one could stay with it to 37 if that's how it unfolds. Zones are an area, just like fibs. They both put an exact number on your chart. Sometimes price pulls all the way back to it. Sometimes it comes a little bit shy. Sometimes it spikes it. You've seen it with fibs. You'll see it here. Now, we get accustomed to price pulling right back to the zone, holding, doing what it's got to do. But there's times it'll come a few ticks shy. Sometimes it'll spike it. We'll watch what happens here. 29.30, 29.35. Okay? That is the high probability move if we can get through this area right here. Swing high, 29.28.5. So we'll come back and we'll check on that in a few minutes. We'll see what happens. Let's jump over to the Dow. And last night, the Concierge Trade Alert said, consider being long at or above 260.70. 260.70. That's going to be right in here. Now, when you become a CFRN passport holder, okay, this isn't about you just coming and us giving you alerts so that you know what to do in the market. That's part of it. But the larger elephant, or the larger element is that we teach you how to spot these yourself. You don't want to spend, first you want to become consistently profitable in the market. But beyond that, you don't want to be dependent on somebody else to be your eyes and ears in the market for the rest of your life, because what happens when those eyes and ears step in front of a bus? The party's over. So it's very important that you learn how these alerts come together, what they look like, what the setup is, how to enter, how to exit, how to manage everything. And that's what we teach you as a partner and as a passport holder. Okay? No more black box trading, no more just taking somebody's word for it. No, it's important that you learn how to read the chart. It's important that you learn what the next high probability move is. There's a lot of power in that, okay? Now, are you going to get it all overnight in a day? No. Will it take you years? Well, it shouldn't. It shouldn't take that long. Now, part of it will depend upon what kind of experience you have in the markets trading. If you have good experience trading, then it won't take you long at all, most likely. If you have bad experience, in other words, you've blown up some accounts like most people have, and you've tried this and tried that and tried, we got to deprogram you first. We got to wipe your memory banks and get all the stuff that didn't work out of there, so that we can then teach you what, as you can see, does work, okay? Now, this is no holy grail. This is no magical, mystical experience. It's all logical. And as I teach you how to trade, you're going to see the logic just, it's like little blocks, little Lego blocks just coming together, snap into each other. From 26070 or 26070 up to the zone overhead, that's a 25-point move. Alexa, 25 times 5.
25 times 5 is 125.
So that's $125 per contract traded.
$125 is 112 euros and 58 cents.
Okay, Alexa, thanks. Sometimes she gets a little overzealous. Now, price traded through the zone. Okay, but then look what it did. It pulled back, good resistance, made it through, pulled back, confirmed good support, away it goes. Okay, this one we didn't have multiple triggers here. But just up to the zone was 25 points. Up here, it was, let's see, 170 minus, so that's 100 points right there. From the trigger to this swing high, 100 Dow points at $5 per point. It's $500 per contract traded, and the 10 contract trader, the $5,000 move. Price then tried to pull back to get below the trigger again, but the zone prevented it, acting as good support, right? Once you're with us for a while, you'll understand and recognize what this is. And then you, of your own accord, under your own steam, without any prompting from anyone, will understand getting long on the open of this candle, which would be 122, and we ran up to, well, another 100 points, okay? And then we pull back, we make it all the way back to the BBC this time, and the weekly trading zone. Now, when price pulls back to the BBC, we expect it to be good support, and it was. When price pulls back to a weekly trading zone, we expect it to be good support, and it was. When you have these two things coming together at the same time, that increases the high probability nature of the move. Now, you see this red line, red and falling. This is the CFMA1, red and falling. When price approaches red and falling, you should anticipate good resistance, and it was. It sent it back down to the BBC, which you should expect to be good support, and it was. Second trip, looks like we're going to make it through that red and falling. So on the Dow, we need to take out that swing high, that swing high, that swing high, and then the next zone overhead from last week, 26,425/430. Lots of room to run on the upside. Okay? Let's go to the Russell. Oh, I guess, let me just show you this. Okay. All right, so on the Dow last night, 260.70 to 260.90. Hey, wait a minute. That's the exact same number as the Concierge Trade Alert. And look what happened when we triggered. Man, that thing just went like a rocket. Boom. Right up to the zone. Traded through it. Then it did exactly what we anticipated. Pulled back, found good support. Another leg. Okay? All right. So we'll go to the Russell. Get back to the Concierge. Okay. Again, with the weekly trading zones, we're coming up on our 10-year anniversary. Publish those every Monday morning. 6:15 a.m. Eastern since December 14th of 2009. All right. This chart's a little bit messy, but let me move some of this stuff from last week out of the way. These are all these charts that you see here. You can find those at eminitrainingschool.com/results. Okay. All right. So last night, Concierge Russell considered being long at or above 1508. That's going to be right about there. Yeah. Okay. So close. There we go. 1507. Close enough. 1507. Swing high. 1514.80. So basically, it's a 7-point move. $50 per point. $350 per contract traded. Now you see what happened right here when price pulled back to the BBC. Launched another leg. Okay. Remember, if you have any questions, I don't even have the chat box open. If you have questions, I don't think there's anything in there. But if you have questions, put them in the chat box so that we can answer them for you. Okay, that's important. Trading is not a spectator sport. Your success in becoming a successful trader will in part be determined by your willingness to come out of your comfort zone and ask questions. And no one sees what you type except myself, Michael, Valerie, and we're not here to judge by any stretch. We're here to try and help, right? But other people, they don't see what you type. So don't think that your question is ever too elementary or too simplistic. It's not. I promise you. If it's a question, it's a question. Ask it, get an answer, move on to the next step, the next level. Okay? All right. Let's go to the NQ. Concierge Trade Alert last night on the NQ said to consider being long at or above 76.87. That's going to be right about there. Hey, pretty close. Close enough. So 76.87. Okay. Now this first little swing high took us up to 77.02. So that's a 15-point move at $20 per point, $300 per contract traded. Okay. Then what does price do? Remember, important prices, important areas are almost always tested. So price gets back below the trigger. Off we go again. First trigger, second trigger. Swing high so far, 77.46. Alexa, 77.46 minus 76.87.
7,746 minus 7,687 is 59.
All right. Alexa, 59 times 20.
59 times 20 is 1,180.
Okay. So
I'm
for
not quite sure how to help you with that.
you did real fine. Thank you. $1,180 per contract traded. Okay. 76.87 of the swing high. Now, again, it's difficult to get out of the swing high or swing low since you don't know that's the case till after the fact. But worth noting, that is where the market went. Here, we attempted to pull back to the BBC, triggered, back below the trigger, trigger. This will happen. Just as price might come up a few ticks shy of a zone, it can happen with the BBC, just as it can spike it. Okay. Tried to touch it, couldn't quite do it. There was so much buoyancy in the market. Off we go again for another leg. Leg and a retracement, a leg and a retracement, and a leg. For the 10 contract trader, the trader who's earned the right, and I can't stress enough, you have to earn the right to trade that many contracts. You need to earn the right to go live. Otherwise, you're just throwing away money. If you can't be consistently profitable in SIM, you are throwing your money away if you go live. Now, let me tell you the tale I told myself back in the day. In 2005, I had difficulty being profitable in SIM. Tried everything like everybody else, from using fib numbers as, the size of tick chart I was using, just all kinds of stuff. I didn't know any better. And back then, there was nobody to teach you. I want to thank Mike Reed. He taught me quite a bit. He did his very best to teach me, and I was a real dunderhead. I think I could have worked for Dunder Mifflin. But anyway, he was gracious. He shared with me some of his many years of experience. I mean, this guy was trading back on Black Monday. So he knows a thing or two. He's very kind to me. And I had some other people along the way that spoke some truth into my life. But pretty much, there was nobody out there in 2005 saying, hey, I'll teach you how to trade. There were plenty of websites with indicators and oscillators and gurus and chat rooms and, $20,000 software and all this kind of stuff. But an actual teacher, someone that would mentor me, that would explain things, that I could ask questions to, a person that would, spend one-on-one time with me, making sure I understood the principles. No, there wasn't any of that. At least I couldn't find it. And I put out a bounty. I offered some good money because I saw the potential. I saw the possibilities. I saw the reality. Just couldn't get it to go where I wanted it to, when I wanted it to. And that was part of the problem. You never can. You just got to figure out what it's doing, where it's going, and hitch a ride. It's that simple. Never easy, but that simple. Okay? You have the benefit of someone that's actually willing to spend time with you and teach you how to do this. Wow, he must be a really nice guy. Well, we are. Michael and I and Valerie, all of us, Bert, we are very nice people. Okay? But don't be misled. You are an income stream. Oh, that sounds so harsh, right? No. If you've ever read any books written by some of the uber wealthy, like Rockefellers or Trumps, there's always a section of their book that tells you the importance of having multiple income streams. So maybe you make money as a contractor. Well, then you should have another income stream from rental properties, and maybe another income stream from this house painting company that you own. Multiple income streams, right? So if we understand trading, we can trade, income stream. Lots of people want to learn how to trade. So if we can share our knowledge with those people, that becomes a very healthy income stream in and of itself. Now, it doesn't mean I wouldn't help you if you weren't paying me. It doesn't mean that. I probably would, but I wouldn't work around the clock. I wouldn't be there at your beck and call every time you type a question in a telegram. I mean, let's be real. After all, that's what we offer you, is the truth about trading. No more parlor tricks. No more gimmicks. No more garbage. Come on, you deserve better than that. And if you believe anybody that tells you they're going to make you a trading superstar for $99.97, just download these indicators and this PDF, go knock it out of the park. We've all fallen for that multiple times, right? But it's a new dawn. It's a new day. Wake up. Take control of your financial destiny. If you don't, nobody else will. Okay? All right. Moving on. Let's go to Crude. We've rolled to the November contract. Our last alerts that came out on the September contract, we had an alert last week. Is that John? Okay, that's John. Can somebody open John's mic, please? All right, guys, remind me to pick up on Crude when I come back. All right, John, welcome to the show. Apparently, I'm the only one here. Okay.
Hi. Hi.
Oh, there you go. Thank you very much, whoever opened that mic. And John, welcome to the show. Hope you had a great weekend.
Yeah, not too bad, thanks. Hope I didn't interrupt you just now.
Oh, no, not at all. I've been waiting on you.
Okay, great. So what you were saying there earlier on was very valid. It's every hour you get some sort of a thing, from some guy telling you that they can make you a millionaire.
I know. P.T. Barnum would have had a field day if he were still alive.
Yeah. Would have been his domain for sure, the internet.
Oh, yeah.
Well, if you remember last week, we did say that the market looked like if it were to go higher, it would just keep going, and that seems to be what's going on. It's pretty amazing, actually, how they managed to talk up the markets here over the weekend and dismiss this idea of a recession. And this was we've seen a few of these scares MO is pretty similar. It's sort of shock horror for a few days, for a day or two or three, and then the market seems to brush it off and recover. And I noticed that Trump mentioned the dollar this morning being too strong, and one of these days, I guess they're going to try and break it down, because that would be very, very helpful to the rest of the world, as we've pointed out. And he's got a point, when he goes on about the tariffs. He doesn't, there's a few things that they don't really explain very well, which they could do a better job of, which is, they get hammered by the Democrats for the tax cuts for the rich, so supposedly, but that's not the case. The case is making the U.S. a more competitive environment, which they've, brushed upon a few times. They haven't really hammered the point home, just how competitive an environment the U.S. has become. It's back to being the #1 country in the world to do business in, and it's certainly becoming, it's the most competitive country in the world now, again, and, after slumping dramatically during the Obama era, raising. Somebody quoted this over the weekend, that Margaret Thatcher's famous line was, making the rich poorer doesn't make the poor richer.
Boy, that is the truth. It sure is.
Right. And so, who creates all the jobs in the U.S.? Why are we at all-time record lows unemployment? That'd be a pretty good question to ask the Democrats, to see if they're bright enough to know the answer. And the answer is because they have, through lower taxes, corporate taxes, corporations can hire more people. They can boost productivity. There's the fact that we have an investment. Not quite an investment paradise, a fiscal paradise, if you like. But the U.S. today is the closest thing to a tax haven, without actually being a tax haven, i.e., by reducing the tax. Not only did they reduce the tax to a level where trying to avoid tax or evade tax, the fairer the tax is, the more likely everybody's going to pay. Not going to spend, go to these tax havens offshore or go to Ireland and all these places. Incidentally, I read over the weekend that Ireland is actually the 6th richest country in the world today. It's even ahead of Qatar with all its oil and gas, which is pretty amazing. And I think it's Switzerland and Luxembourg and forget who. Norway is up there because of its giant oil reserves and its huge superannuation fund. That's over $1 trillion for a population of 4 million. Interestingly, Denmark is number 9, and the reason I sort of fell upon this was I was actually going to check out the per capita GDP of Greenland and the value of Greenland, which I think is only like 100 million or something like that, 100 billion rather. Wait a minute, 100 million. It's really, I think, or maybe a billion or two, or 3 billion. I think it is 3 billion maybe. But I think Trump could actually, it's funny because Denmark says it's not for sale. Well, the easiest way to fix that is to buy Denmark as well. Throw Denmark into the mix, because first of all, over recent years, Denmark and the U.S. has become very aligned, very close. Denmark is number 9 in the world in terms of it's ahead of Germany. In Europe, in the EU, I think Ireland is actually number 1 in the EU right now, which is amazing. Really? Yeah, because I'll never forget, that street you walk down outside our house in Kinsale, sort of going from the sea to that pier. I think you took some pictures in that street.
I did.
Going back into this sort of towards the town, or the back road of the town. There was a little shop on the corner, which is probably a very hip hip kind of a store today, but I remember they offered me that shop for about 10 grand back in 1984 when it was, the people used to prop up the walls, looking for work.
Yeah.
I mean, it was a dismal picture. It really was. And that was sort of the worst, the nadir of Ireland's kind of worst period, after the, sort of the 82 recession. There was more than 10% unemployment in the US, and it took a while to come out of that. And of course, Europe was behind the US. So that was about the worst point in Ireland. And today it's just mind-boggling what's being accomplished in terms of, I think they're sort of somewhere between fourth, fifth, and sixth richest country in the world per capita. But the other interesting thing is that Greenland is not that far behind, even though it's in a very remote location, and that's what all the fuss is about. Costing Denmark 700 million to maintain Greenland, and they were moaning about that, which probably bought up the whole thing in the first place. 700 billion in the US, sort of drop in the ocean. 700 million rather, is a drop in the ocean. You got to spend that every minute. But
what I read, John, and correct me if you heard something different, but what I heard was that Trump never said, "Hey, let's go buy Greenland." It just came up in conversation. They were talking about. I'm trying to remember now exactly what the conversation was. And somebody made a comment about Greenland and buying it. It was sort of like a joke. And then Trump said something like, "Oh, really?" I mean, that was kind of the extent of it. Oh, really?
Yeah, exactly.
And all of a sudden, that got turned into he's trying to buy Greenland.
Yeah. Well, like I say, it's look. Ireland's GDP today is there's about 4 million population, call it 4 or 5. Is 333 billion, so it's a third of a trillion, which is remarkably large for a small country like Ireland. And Denmark is only 66 billion, so I mean, you really could buy Denmark for a pretty penny, and it would be very smart for the US to have a foothold in Europe. From a strategic standpoint, it would be, it would be brilliant, because you sort of have a transshipment. You'd have a kind of a transshipment thing. Then it would, make the U.S. much more committed. Not that they already aren't, but given all the beating that Trump has been taking about Europe, it would increase the security of Europe. It's a kind of a logical idea. Sort of fitting into that, because remember, the Baltic nations are not 100% all in on Europe in various ways. So, it's kind of an interesting idea. I think would be viable, and ultimately, it's not. They don't have a very large population either, so it's not as if you're going to be overrun by people.
So the last purchase the U.S. made, if we were actually considering such a thing. The last purchase was President Andrew Johnson in 1867. We bought Alaska from Russia.
Yeah, that was the deal of a lifetime. That's for sure.
Yeah.
And Greenland could be the deal of a lifetime, because the potential value of Greenland is hard to contemplate. Hard to compute. It could be worth anywhere from $1 trillion to $3 trillion potentially. And there was on Full Measure yesterday, Cheryl Atkinson, they did that repeat of the oil story out of Texas, the Permian Basin. And that's now the biggest oil field in the world has ever known, which, 10 years ago was completely off the radar, and nobody saw it coming. And they're talking now about, imagine by 2025, the U.S. being a net exporter of up to 8 million barrels a day. That's one of the reasons why the U.S. is doing so well. It's kind of the hidden benefit is the fact that we just cut back dramatically on oil imports, and are producing 13, 14 million barrels a day now. And in fact, the whole North America, when you throw in Canada and Mexico, the whole North American economy, which is the sort of the Mexis economy, if you like, or what do they call it, the Canada.
The NAFTA.
The new NAFTA.
Oh, the new.
Is,
I can't think of it.
It's a 500 million population, something close to, or getting up towards that, and it's a huge GDP is probably 25 trillion, something like that, approaching 25 trillion. So it's the biggest trading bloc in the world, and being self-sufficient in oil, and between all the three countries having a massive output. The oil output of all three countries is probably about 20 million barrels a day. So when you look at, it dwarfs Saudi Arabia and dwarfs Russia when you look at it in that context, which is interesting.
Yeah, indeed.
By the way, these candidates, they seem to be going from bad to worse. You had, first of all, they were bashing, racism the last few weeks, and when that kind of got worn out, they're still at it, trying to. Beto was in Arkansas, of all places, trying to say that the whole country's, been founded on racism and all that.
You know what? People like that should be taken. I'm sorry, I say this with Christian love. People that say that kind of thing about our country should be taken out and shot. So put an end to the foolishness right now.
Yeah. Well, Booty, my new nickname for him, Booty, alias Noddy. He really blew it this weekend. He sort of did the Hillary Clinton deplorable without realizing it. Said that Trump brought out the worst in all of his followers. I mean, what a disgraceful thing to say.
It is.
It's just ridiculous.
You wouldn't say that kind of thing about Putin if you live in Russia.
Right.
You wouldn't say that about Z if you lived in China.
And you wouldn't even be able to. You wouldn't get the words out. You couldn't complete the sentence in North Korea. So.
Yeah. Right.
So. Anyway, there's actually, guess what? Dry ships got taken over today.
It did.
For a 37% premium.
Been following that thing for many years. Let me bring up a chart of it. Who's
actually
taking
gave a great buy signal just right before it. And I saw it moving up last week, and I should have pounced on it. But anyhow, that's probably pretty bullish for the world economy.
What's the symbol? I thought it was dry.
Sorry, DRYS.
DRYS. Okay, there we go.
You can see it up there. It went from 380 to 518.
Let me get it on the daily. There we go. Okay. Look at that volume spike.
Yeah.
Now, who did you say took them over?
Some unknown outfit. I think they had a stake in it already.
Mm-hmm.
And
Dry Ships is sailing after buyout deal for $5.25 a share. $5.25 a share, and it was trading on Friday. Well, yeah, on Friday it was trading at like $3.75. Well, there's some happy shareholders.
Yeah, sure. Yeah. I think the last time we looked at the Baltic Dry Index, it was moving up, which is good for the world economy. And
Baltic Dry. Can I do which one of these it might be?
Try index. Put index.
You think
up.
It might be this right here?
Could be.
GI, because all these are different designations. Banks, media. I'll just try that and see what happens. Anything like what you're looking at?
Could be because it was rising earlier on in the year. So the fact that if it is, I can't bring mine up at the moment. Hang on, I might be able to pull it up here.
Baltic and
BD, yeah, BD. It's up. Yeah, it's been rising since the beginning of the year, pretty strongly, actually. Pretty strongly. It was at 600. It's gone up dramatically. It was at 600. Or six was in the 600 on the scale, whatever scale that is, and it's recently hit 2200. So it's had a very, very big rise. In fact, it's making new. It's certainly a long way from all-time highs back in 2007, but it's approaching the highs of the last 7 years right now, which is pretty good. It kind of looks like it's going to go higher. So that kind of means that the world economy is not in such bad a shape as you might think.
Yeah. Story on gold today.
And remember, a lot of stuff is being air freighted these days, and then there's also a lot of stuff going by train instead of ship, from China overland to Europe.
Right.
Gold, I was going to remark on that. Gold opened lower this morning and has traded higher. Gold's off, but it's not off by much.
Oh, not much at all. I mean, if we don't have if this thing's going to stay healthy, if this up move is going to remain healthy, there has to be pullbacks along the way.
Yeah. The stocks pulled back sharply this morning. They opened down near the lows and they went up immediately from the lows. I think that's probably it for the gold stocks correction. Royal Gold got down to 122, 121 and a half, and it's back to 126. And so it's a pretty stout move.
There's Royal Gold.
It really looks like we're about to start the next up leg on the gold.
Yeah, no, absolutely. Absolutely, it looks like that. Looks like it's underway right there.
Yeah.
Based on this chart of Royal Gold.
Yeah. And if you look at the weekly, if you go to the weekly S&P, you'll see, I mean, really, we got potentially one of the strongest buy signals ever seen on this S&P right now. Now, it doesn't look like it particularly on that chart.
Here's weekly, John, of the S&P.
Yeah. So it really does look,
we got a higher high, another higher high, and another higher high.
If it's able to claw its way back and kind of get up towards the highs, it could really advance a lot. It's still, a precarious situation because if something goes wrong and we turn down from here and take out that last week's action, last 2 weeks, that would be very bad. It'd be kind of devastating. But given the way it's managed to come back really to negate, I mean, it's basically negated the entire downside of the last couple of weeks, which is what we were suggesting might happen, late last week. And, I said if it goes up Monday, all well and good, or Sunday night, Monday, all well and good. Well, we're certainly up pretty dramatically today. And it's an unusual kind of it actually
Here it is on the daily, John.
See, look, you see the bottom. We talked about this when the thing made the first turn, right? Put that doji, kind of a doji bottom in. But look at the expanding range and potentially expanding volume. It's almost poised for, it's almost dynamically bullish. I mean, it could go, as we said last week, it could go vertical here. It really is already vertical, but it could go seriously vertical from here. It could actually explode higher from here, subject to some sort of news coming out.
Critical to take out this swing high right here at about 29.45.
Yeah, you've got this. I don't know whether they're going to go to Wyoming. Where do they usually go?
They're going to Jackson Hole.
Jackson Hole, yeah. Mm-hmm. Which means, usually in the last week of August, there's a lot of buzz about that. And if you go back and look at a few previous Augusts, this was actually a very bullish. This is sort of replicating some previous August action, especially in 2017. We went up from, and it's what happens every 2 years, 2017, 2019. We had a record run from 2017 through the end of the year, remember?
Right.
With the tax cut and everything. So this has a potential, a lot of deja vu to it. And boy, if we start hitting new highs, I think we're going to 3,300 without any doubt, on this. And because look, the continuous stimulus that's been going on now for quite a while in all these other countries has got to sort of get some traction. It may be just at the point of getting traction. And I thought of this last night. Don't forget that we peaked back in September last year, right? Mm-hmm. So we should be seeing, about a year later, or 9 months to a year later, we should be seeing the economy pick up. So we have, we've maintained a fairly steady pace, but if the economy was to accelerate here in the next few months, and it could, that would really, be probably very well received, especially if they're going to, if they end up lowering rates down a couple of notches, a couple of points. That would be, it could be very similar to what happened in 1998 through 2000, where they, if we look at, if you put yourself as being in 1998 right now, where the Fed lowered rates, and they had the dock strike and they had a heart attack correction, and then all of a sudden the markets took off and never looked back until 2000. The Nasdaq doubled the next year. We could be heading for something like that.
Well, gold. Yeah, go ahead.
And it's just been a feature, as I said last week. You with the benefit of hindsight, if you bought every dip that we've had in the last few years, you'd have done extremely well. And we've basically been doing that here, and one way or another, and selling the rallies.
Yeah. So we dropped from 1509. That was our trigger last night on gold to get short 1509. We put in a swing low at 1503.30. We'll call it 1504. That's a $500 per contract move right there. And I think we have an alert in the wind right now. If not, I need to put one out there because it looks like we're going to take that move again.
This is a bit of, it's starting to, it looks like it's might be headed down.
If we can get a double bottom here, then that could be the very thing that will allow us to turn and continue this upwardly mobile journey that we're on. Hey, there was a question for you. Does John see a bottom anywhere on Tilray?
I was thinking about that. No, Tilray's going to hit new lows, and it did rally a few times, but it's I don't know what the heck pushed it down last week, but it really fell out of bed. And I think
goodness gracious, that's a daily chart. Look at that.
Yeah. It's certainly in an area where it could be, it's about as low as you might go. Remember, with these IPOs, very often you get a kind of an up move. First of all, you get a down move like you had the first time. Remember, we went up to 35, came down to 20 in the mid-low 20s, and then took off, went all the way to 300. It's going to take a while, I think, for this stock to find a bottom and build a base before it heads back up. But it's probably going to have another day, and it's going to live to have another day at some point in the future. But
according to this, the swing high was exactly $300 on the nose.
Yeah.
That's interesting.
Well, we called it ahead of time, if you remember.
Yeah, I do.
Anyway, it certainly looks like it's not. I mean, when you get to this level, you don't know when it's going to turn. It could turn any time. But it's sort of making a kind of a double bottom there against the previous. It's $5 below it now. $5 below that previous low. So, it's it's hard to say where this thing, how it'll play out.
Anything else you want to cover, John?
No, listen, thanks very much for the invite, and have a great afternoon. All the best.
Right. Talk to you soon.
Bye-bye.
Okay. Let me take a look here on gold. All right, so from 1509 down to just 1504. It's a $500 per contract move. That's a concierge alert from last night. Now let me check logic to see if we have an outstanding gold. Doesn't look like we do. Okay, so stay with me. Oh, wait. Yeah, I'm staring right at it. The last alert that went out was to consider being short. 1510 to 1509. So that's underway. Right, so there won't be any additional. We just leave it at that. Okay. All right, so on the S&P, we covered the concierge logic alerts. We did the Dow. We did the Russell. We did the NQ. Crude. I was on Crude, and we were talking about these moves that took place last week when we were on the September contract. We had an entry at 55. The first trigger took us 30 points higher. The second trigger took us up to a swing high at 57.47. The exit signal printed right here. Now this is a perfect example. Remember, the exit signal is only going to work for you on an extended move. So what's an extended move? An extended move is when the move is greater than what the average swing in that market is. Example, average S&P swing, 3 to 5 points. Once you get past 5 points, that opens the door for it to becoming an extended move. Crude, this is an extended move. This wasn't. This is. Put your indicators on. So the alert gave you a good idea where to enter the chart. You see how price starts to walk sideways here? But more important, you see this little black step line here? See how it crossed over? It's on the left side, and then it crosses over. Because this was a long alert, the first red candle that closes below the step line, after it crosses over, the closing price of that candle, $57, that's the exit signal. That's a $2 move from 55 to 57, from the published entry to the exit signal that printed on every one of our traders' charts, right there. It's a $2 move, $2,000 per contract traded. And yeah, for the 10 contract trader, the trader who's earned the right to trade 10 contracts, it's a $20,000 move. Now, that's a function of math. The fact that this was a $20,000 move for a 10 contract trader has nothing to do with our methodology specifically. Again, that's a function of math. When price moves $1 in crude, it can make you $1,000 or it can cost you $1,000. Depends upon which side of the street you're on. Okay. Over here, we had a short alert issued August 13th, 6:20 p.m. Consider being short 55.65. Price dropped to 54.67. Okay. So we were just a few pennies short. Well, the swing low, 55.65. The swing low was actually 53.97. The exit signal. Now, we're looking for a red candle here to exit on this long move. On the short move, we're looking for screen close above the step line. Over here below, above. And so the chart says at 54.67, take your leave. And then what happened? Price goes sideways. When a move runs out of steam, this is what it looks like. Okay? Alrighty. Well, we've covered just about everything. If you have any other questions, put them in the chat box. We're going to go to our good word for the day, and then we'll be back at it. If you're not on the trial, and you want to be on the trial, because you've never taken the trial before, go to eminitrainingschool.com/results. This place. These are last week's results. $58 alerts issued. 8 of them never triggered. That left us with 46 actionable alerts. 7 were stopped out. So that means 14.6% of actionable alerts were stopped out. And then charts that we've gone over today, you'll find those and more on this page. Just scroll down so you can sign up for the trial. Still got rest of today, Tuesday, Wednesday, Thursday, Friday. Now, this article that I published, think the good life's out of reach. Look at that view. This is in Ecuador, Manta. That's what it looks like from the sky. Look at that kitchen. Can you imagine sitting on that deck, looking at that view? Wake up. Can you imagine waking up to that view? Right? I can. I absolutely can. Now, my wife and I were headed there, and then life happened. We got a phone call, and someone that we knew very well, you know, family friend, kind of my wife and I, we adopted somewhat late in life. My son was, well, he first came to live with us when he was 4. My daughter, she came to live with us when she was, I guess she was about 4 too. Now he's 17, and she just turned 13. My wife and I were planning to go live the dream, but it didn't fit in with us adopting these kids, and I got no regrets. Let me just tell you, I wouldn't have it any other. If I never get to see Ecuador again, well, at least I've seen it once, right? How about taking a shower there? I mean, good life, right? All right. Little walk on the Malecon. We get you some street tacos. Warning, this article may induce wanderlust and travel fever. Never forget, trading for a living offers more than above average earnings. Almost like no other profession, trading is a doorway to freedom. Not just financial freedom, but the freedom to live and work anywhere. Now, we all understood that when we decided we wanted to become a trader. But then, after getting stopped out and blowing up accounts, we get diminished to, you know, we're just groveling. Oh man, if I could just put on a profitable trade, if I could just get in a trade where price goes in the same direction as my trade, I would just feel, that would be so awesome, right? We lose sight of the bigger picture. We lose sight of the freedom that's offered. I wrote this yesterday just to bring everybody's attention back to why we got into this business to start with. Don't lose sight of your dream. Ecuador, the topic of this week's column, is only one of many incredible destinations where a consistently profitable trader can choose to work, live, raise a family, retire. It has remained at the top of my list for years for many reasons. Now, that home that I showed you above is just one example of how far your overstretched American dollar can go when you're willing to adventure beyond the walls of your own comfort zone. What do you think the asking price is for $1 million view like that? Well, in this case, The ask is $189,000. Ecuador has much more to offer than just incredibly affordable housing. If you live in that house, your utilities are going to run you about $100 a month. That's your water, your electricity, your cable for the TV, and civilian internet. Groceries and entertainment. If you eat out occasionally, you're going to spend about, for a couple, two people, about $350 a month for your groceries, $250 a month going out to dinner, maybe taking in a movie, maybe having an adult beverage somewhere. You want a maid, $50. Medical insurance. This is full coverage medical insurance. Surgery, tests, whatever. It's provided by the government, IESS, $100 a month. Two people. Transportation. If you don't want to have to hassle with a car, you just want to take a taxi or a bus, you know, all you're coming and going, the average taxi ride's about $2. So you get, you know, one a day almost. The average temperature year-round, 75 to 85 degrees. In Manta, you'll find golf courses, tennis clubs, fitness centers. They have an airport, and it's about to become an international airport. And then internet, okay? The civilian internet there, it's okay. Not great. Internet is very important to a trader, okay? The last entry on the list is the most important one to a professional trader. No matter where you work in the world, the business of trading demands fast, reliable internet. No hiccups allowed. Civilian internet service is readily available, not very expensive. However, if your ability to live and work in Ecuador depends on your internet connection, you can have your own personal fiber optic laid from the nearest switching facility right to your home office, your home, or your office, however you decide to roll. Laying that fiber, even if it's across town, it's going to run about $200. And then you're going to pay $150 monthly. Freakishly fast if you go this route, okay? Forget about messy currency conversions, as the present currency of Ecuador is the American dollar. It makes it very convenient. If you prefer to rent instead of buying, Manta has several nearby beach communities, a nicely furnished 2-bedroom, 2-bath condo with an excellent view of the beach and the port. See all the little boats out there? Views of the entire fishing fleet. It's going to cost you about $700 a month for a nice place. That includes utilities. Next week's column, I'm going to write about some of the lesser expensive places. You're going to just be blown away. People also visit Manta for tourist dentistry and surgery, as healthcare here costs pennies compared to the US and Canada. Most medications can be bought over the counter, and there is access to countless generic equivalents that are very reasonable. Health insurance can be purchased through the government once you've established your residency. It's very inexpensive, $70 a month for a single, $80 for a couple. Medicines and examinations are all included, as are surgeries and standard dental work. Most medications are generic, but they are of high quality. If you're on this health plan, you've heard Americans complaining about not being able to afford their insulin, having to go to Canada to get their insulin at an affordable price. That's just wrong. Not a problem in Ecuador. On this $80 for a couple, the health insurance, $80 for the couple, that includes your insulin. It's the exact same health insurance used by all Ecuadorian citizens. Now, this all sounds great, right? Better than great? Let's get to the bottom line and find out if living and working in a place like Manta, it doesn't have to be Ecuador. As I said earlier, there's lots of places that welcome Americans. But is it within the realm of possibility? As with all things in this material world, it eventually comes down to the money. With high-speed internet Your job as a trader, no different than if you were working from your current office, your current home, or even maybe you got a co-located spot in lower Manhattan. Before anyone goes chasing sunsets, you have to pass this test. Are you consistently profitable? And there's only one acceptable answer, and it has to be emphatically, without reservation, yes. So are you? What does consistent profitability even mean? It's actually quite simple. If you can average 2 points a day trading the S&P 500 E-mini futures, that works out to an average daily income of $100 a day, $500 a week, $2,000 a month. That alone would support a comfortable and exciting lifestyle in Manta if you have no other expenses or monthly bills. Unfortunately, most of us do. There is a way to increase your average daily income tenfold without having to take even one more tick out of the market. And the CFRN 2420 blueprint tells you exactly how to do it. Hey, Valerie, can you take that incoming chat, please? Thank you.
Yes.
All right. Appreciate it. Do you have that on your phone?
I'm at the keyboard.
Okay. No, I'm just asking, do you have it on your phone?
Yes, I do.
Okay, great. All right, thanks. All right. Since 2009, the 2420 blueprint has shown traders just like you exactly how this can be done. The CFRN E-mini method starts you out in SIM until you achieve consistent profitability. Once you pass that test 10 consecutive days in a row, the blueprint gives you the green light to go live with one contract. The next test is to just keep doing what you're doing as you increase your account balance by $2,000. At $100 per day on average, that's 20 trading days. $100 a day, $2,000. Once that goal is reached, the blueprint gives you the green light to add your second contract. Now at this point, you effectively double your average daily income. You're now at $200 a day, $1,000 a week is what it should say, $4,000 a month. I screwed those numbers all up. At this point, the blueprint moves you into a calendar-based process for adding additional contracts. Based on the blueprint calendar, you now know exactly what day you'll add your third, your fourth, your fifth, etc. The most important takeaway here is understanding that after the first contract, you are building your trading business using profit you earned in the market. Ask any expert, any shark from the Shark Tank. There is no more powerful way to build and scale any business. Going forward, every contract you add is underwritten 100% by your ability to trade consistently and profitably. You will not find this dynamic in any other type of business. Each day, every profitable trade brings you one step closer to your goal of financial independence and geographical freedom. Self-discipline is a very important ingredient of the successful trader recipe. You must resist the temptation to go live too soon or to trade too many contracts before you earn the right. The 2420 blueprint is designed to take you from one contract to 20 over a period of 24 months. 10 contracts per the blueprint should take somewhere around a year if there are no hiccups. And in trading, you will find hiccups. Not only does the 2420 blueprint provide step-by-step instructions, when the inevitable happens and you blow a tire, doesn't mean the race is over. Pull in for a pit stop, switch back to SIM, immediately schedule a one-on-one mentoring session. Help is readily available to troubleshoot exactly what happened. Was it you? Was it the market? Having a personal E-mini coach standing by will help you figure out which one it was and get you back out on the trading floor right where you left off, muy pronto. Now, this process could add an additional month to 6 months to the journey. That's okay. It takes as long as it takes. If your freedom costs you 18 months instead of 12 or even longer, it's a small price to pay. You are turning your dream into a reality. That's a bargain at any price. Now, unfortunately, for 9 out of 10 traders, it will always be a dream and nothing more. If all this quickens your pulse and puts little beads of sweat up on your forehead, good. For the moment, resist the urge to start packing. Putting the cart before the horse is always awkward and exactly what most traders do. 9 out of 10 anyway. Take the proper affirmative next step of your journey. If you have not taken the Logic 247 free trial, use the form on this page to sign up. And it began last night at 6 p.m. Eastern, but we'll still let you in. All right? That will allow you to embark on a methodical, structured learning experience right now that has the potential to separate you from the rest of the pack. Are you sick and tired of being part of the huddled masses? The 9 out of 10. Well, somebody's got to be the 1 out of 10. You've been the 9 out of 10 for a long time, right? I know I was. Do you want to be the 1 out of 10? Then do not let this opportunity pass you by. This could well be the most important trading decision that you'll ever make. Think carefully, act decisively. You see, this 1 week free trial cost you nothing. We deploy time, resources, and all kinds of stuff for you to be able to take advantage of this trial, but it cost you nothing. No credit card required. You're going to come, you're going to learn a methodology, you're going to use our indicators, you're going to see the alerts come through that channel 24/7, like I just showed you. Right here, you get the Concierge Trade Alerts, plus you get the Logic 247 alerts. Last week, 14.6% were stopped out. We're on week 55. These are the alerts since 6 p.m. Eastern last night. Z means it never triggered. Red X means it was stopped out. Oh, and this carryover from last week, that was a Bitcoin futures. Remember we were talking about it on Friday? Okay, that was a carryover, found its target, and I said we'll probably be following this much more closely going forward. So when you see BTCQ, you know that's Bitcoin futures. Thumbs up, price found the target. Z's, it didn't trigger. And the red X means it got stopped out. And a little clock like that, a watch, means that it's underway. It has triggered, waiting for the target. Okay. All right. That's the deal. That's my story. I'm sticking to it because it is the truth about trading. If you've had enough of the gimmicks, the false promises, the smoke and mirrors, the parlor tricks, only you can choose to do something different. I can't choose it for you. We all know insanity is defined by doing the exact same thing and expecting different results. That just won't happen. It defies the laws of physics. So don't be insane, right? You don't have to get an education from us, but if you just keep clicking the mouse and throwing money at the market will keep sucking up your money like a black hole, and you will keep wiring money to Chicago until you don't have any more money. Period. You have to be willing to do something different, okay? Maybe we're not your different. Maybe you need a different kind of different. But goodness, do something different. Okay? Good word for the day. We were talking last week about how to solve problems. We're going to continue with that today. Proverbs 14:15. The prudent give thought to their steps. Evaluate your problems carefully and prayerfully. Here's what King Solomon said about reacting impulsively instead of taking time to get all the facts. Proverbs 14:15, the simple believe anything, but the prudent give thought to their steps. Proverbs 18:13, to answer before listening, that is folly and shame. When patients are in pain, they want quick relief. But the doctor knows that the pain must be diagnosed correctly in order to prescribe the right medication and make the patient whole. For you, that means asking yourself, who or what has caused this problem? Am I making a mountain out of a molehill? Has it the potential to do real damage? Or will I have just forgotten about it all by this time next week? If you don't diagnose the problem correctly, you'll have to go back and start over again, at which point the solution will probably be more painful and costly. Mike Levitt, former United States Secretary of Health and Human Services, said this: there is a time in the life of every problem when it is big enough to see, yet still small enough to solve. The key is to find the right time and be patient when implementing the solution. Inexperienced people expect problems to be settled instantly. But experienced people are like the master sculptor who keeps striking the marble block with steady blows of the hammer. Unlike the rookie who expects to split the stone with one blow, he knows if he just keeps working, he will eventually succeed. And so can you. That's our good word for the day. Thanks so much for tuning in. I'll see you all in the Telegram channel. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.